What a way to end the week, Scarlett, here. We've been kind of up and down all week long. And, of course, a big sell-off today in the markets. Most of that tied to what we've been seeing in the geopolitical space. A lot of concerns right now about the Iranian response to those most recent Israeli strikes here. You saw the S&P 500 move lower on the day by about 1.5% here. That's the second biggest decline on a percentage basis of the week. But in terms of the number of companies that declined, this is the broadest based sell-off that we've had all year long. In fact, the broadest since we go back to mid-December. That was back when we had that big Fed pivot that rattled a lot of folks. You saw a big bid come into commodities, particularly actually you saw it in a lot of the precious metals, you saw it in the industrial metals, and you saw it in oil here on the day. The VIX was elevated back above 18 at one point here on the day, and you see the slight drop in yields. It may not look like much, Scarlett, given the 22, 23 basis points we saw a couple days ago, but this is a move we haven't seen in quite some time, and it shows you, at least on the macro right now, there is some concern.
Absolutely. A rush to safe havens. Let's get you a look at some of the individual movers on the day. We're going to start with Zoetis, losing almost 8% on the day. This is the animal health company, and it's down on a report that U.S. and European regulators are conducting reviews of its arthritis drugs after reports that there are thousands of side effects experienced by animals. So that stock taking a bit of a hit. I want to move on to the financial sector, where Progressive defied the overall sell-off in equities after its first quarter profit beat analyst estimates, reflecting what analysts call a favorable auto environment. Remember, the CPI report we got earlier this week showed that services inflation, like car insurance, accelerated in the month of March. And the worst performer among the banks in the KBW Bank Index was JP Chase, losing 6.5% on the day. In fact, I looked at how it typically responds to earnings. This was the biggest earnings trigger decline in about 2 years. We know the story here. Net interest income missed analyst estimates. It's a sign that, of course, higher rates is forcing banks like JP Morgan to pay up for depositors. Now, our top story this hour is feeling the impact of geopolitical risks converging with tepid lending profits at the big banks. You had news reports that Iran is getting ready to attack Israeli government targets as soon as this weekend, serving as a crucial reminder that perhaps investors got too complacent about the ongoing war in the Middle East. And while the stock market was counting on earnings to justify this year's rally, first quarter results from the likes of JP Morgan, Wells Fargo, and Citigroup show that high rates are no longer so profitable to their bottom line.